Hello traders, hello everyone, my name is Grega Horvat and welcome to our week ahead video for Forex Analytics. So I'm back from a 2-week vacation while the Blake is now away for the short trip in his country. So I will take the stage now and drive you through the interesting Elliott wave charts. As you know, I'm looking at the markets mostly from the Elliott wave perspective because I see that they're moving obviously from pessimism to optimism and vice versa, and this sentiment and traders' decisions are forming different but repeatable patterns. So we will firstly look at the US dollar. Now, firstly, before we go to some of the wave counts, I want to look at this correlation between US dollar and US yields. And what you can see here is that actually in the last few weeks, we have seen a negative divergence between these two. And what it means, it means that actually US dollar has moved to the upside while the US yields showed some evidences of a top. In fact, this similar pattern already occurred here back through February, through March, and back then we have seen that US dollar was continuing trading even higher while the US yields after this first pullback catch the uptrend as well. In fact, this pattern unfolded after the 10-year US notes, which are here at the bottom, also stopped at this very nice resistance here, as you can see back in March. And in fact, what we have now is, well, a very similar developments here. You can again see price is diverging between US yields and US dollar, and the US notes actually stopped at this resistance. And in fact, we are trying to break this channel, meaning that there can be more weakness on the US notes. So in other words, US dollar can stay in the uptrend and the US yields can join this trend. However, I still think that on a big picture, on a higher degree scale, the US dollar is moving into some serious resistance levels around 109, 110 level. So I think that this current drop down, or this on the 10-year US notes, can be the final leg of the higher degree trends. So let's take a look now on here on this US dollar index futures. And what we see here is a very nice 5-wave of recovery away from 2021 lows. And you can see that I'm already tracking wave 5 here, moving into this first potential resistance at 38.2% projection of this wave 3. So I think that this can be late stages of the current advance, meaning that by the end of the year, I would not be surprised if I see US dollar trying to hit a top here. Maybe Fed will be successful with the inflation and this one will come to the downside. Obviously, this would have a negative impact on the US dollar. So here, what I see is, as I said, looking at the wave 5, and if we look at the substructures, well, this wave 5 is still incomplete. Wave 5 is a motive wave, should be made by 5 subwaves. And if you look at this latest rally that we are tracking away from this June 27 low, well, this one should also be made by 5 subwaves, and for now that's not the case. So I think that as long the market is holding this 105.40 level, and as long we are above this trendline support, I think that there can be more upside coming, as I said, maybe even towards 109 level, 110, and that's the serious resistance up there in my opinion. So as long that the previous chart that I showed you, the 10-year US notes will continue trying to make this new breakdown, I think that US yields will join this uptrend on US dollar index. But keep in mind that this is the short-term outlook. On a bigger picture, I still think that there is a serious resistance here on the US dollar. Now let's take a look also on the euro dollar. On euro dollar, firstly, I want to look at the big chart to give you the full perspective of my longer term analysis. So what we're looking at here from an Elliott wave perspective, well, that was a very nice recovery here back from 2005 waves, and since 2008 crisis, well, we have seen a very strong depreciation of the euro, and this has unfolded in a corrective manner so far, and it's still in play. However, what I see here is a 7-swing correction, and this 7-swing correction can be now in late stages. What I really like about this pattern is that we are moving also into the 78.6%. We are moving into this parity level, which is, as you know, very strong psychological level for this pair. And also, if maybe this ECB hiking policy, which is obviously they're trying to follow the Fed, will not be successful with inflation to bring it down, well, maybe the next move could be intervention. And the last time the ECB made an intervention on the euro-dollar pair was back in 2000 in November, when the euro-dollar has been trading around 0.9 level. Okay, so I think if the euro will drop below parity, I think that there could be some talks into this direction and potential multi-year support could be seen here. I still think that at some point, obviously, we will see a reversal in this trend, but of course, I want to see that inflation will come to the downside, and obviously, one way to fight the inflation is that your currency is strengthening. Okay, so we'll see if the ECB will somehow be successful in this field. Now, on the short-term basis, again, of course, we are not seeing any lows. We are still tracking these 5 waves of decline within a higher degree wave 5. That was quite a sharp drop here at the start of the month. So I'm looking this to be a wave 3, meaning more weakness could potentially occur after this wave 4 rally. Of course, we should stay for a bearish trend to remain in the cards, at least in the short term. We should remain below this 104 level. Break above this trend line that is connected back from June highs. I think that this could potentially then tell us that bottom is forming, even if just temporary. Now let's take a look on Aussie. Now, economic activity in China, as you know, has resumed back in June, and the latest data of producers' price index showed a slower rise. It was a 6.1 compared to 6.4 back in May. So this could have some positive impact on Aussie from Elliott wave perspective, or if you want, just from a basic technical perspective. Well, maybe we'll spot a wedge here. Okay, so I would not be surprised if the price will try to form a bottom here. Of course, for a confirmation of a bottom, what I want to see in Elliott wave terms is a strong 5-wave rise from the lows. Definitely want to see a sharp rise out of this wedge pattern, which is normally the case when the wedge resistance line is broken. So far, we are just trying to retest these levels here around 68.60. So if we can produce more upside here, let's say towards 0.7, and if maybe jobs data will be stronger next week from Australia, then I think that we could potentially be building a low here and more upside could be seen. Okay, now looking at the big picture, I still think that this year we could potentially see a support for this correction that we are now tracking away from 2021 highs, and big head and shoulders bottom formation could also be the case. At the same time, watch this Hang Seng index. We are at this multi-year trendline support, so if we can rally away from it, I think that this will have a positive impact on Aussie as well here into this third leg of the recovery, which could be a wave C. So I think that support or weakness in general could be limited as we approach the end of the year. Now let's take a look also on dollar CAD. Now dollar CAD, as you know, Bank of Canada will most likely follow the Fed with a new hike in upcoming week. However, dollar CAD already sees some weakness here if you look at the 4-hour chart. So maybe this is most likely this is already priced in. So it will be interesting to see the response here. I would not be surprised if maybe even in the opposite direction. Now, what I'm tracking here from an Elliott wave perspective, well, notice that we had a very nice clean impulse here up from June lows, clearly in 5 waves. And now what we are observing is a sideways price action or a counter trend movement if you want. You have these 3 waves down here into wave A, and then you have this new only 3 wave move higher here into new highs. So as long this move isn't three waves, it means that because it moved to a new high, it means that it belongs to a higher degree complex correction. So I'm tracking a potential flat here. Very nice support could be around 1.2820. If this one is retested maybe after new high, and then watch out for potential new reversal to the upside. However, that's a short-term outlook, which in my opinion is still bullish as long as we are trading here above this very important 1.2520 invalidation level. But in the long term, in the longer term, or I should say by the end of the year, I still think that we could potentially be looking for a major top here or major reversal, as the pair will try to accomplish this ending diagonal. Okay, so I'm tracking an ending diagonal in wave C, which is a counter trend price action here back from 2021 low. So I will be looking for limited upside, but ideally, as I said, after another push to the upside. Why another push to the upside? Well, ending diagonal is a free pattern, meaning that in each leg you should see three subwaves. But for now, I think that this wave 5 still is missing this whole completed substructure. So I'm expecting this ABC to unfold, and then watch out for very strong resistance at a new high, potentially around 1.32 level. If suddenly we see a break, as I said, maybe impulsive price action close to 12650, maybe even below this trend line, then I think that top would be already be in place. Now let's take a look also on New Zealand versus the US dollar. The economic activity in New Zealand is still doing very well. The unemployment rate is at the record lows. So markets expect a new hike on Wednesday by 50%, by 50 basis points, not 50%. So we will see what will be the response. I still think that this is a very nice potential, very big wedge formation here, moving into this 61.8%. Okay, and then you have also the 78.6%, also very important level, which is also around this level of this minor swing low here back from 2020. So in either case, I think that both supports are quite important. However, again, from a confirmation point of view, from an Elliott wave perspective, what I want to see is that market confirms that I'm on the right track with these supports. So if the price is at the support, it may not matter much until you see a response from that support. So I want to see a broken trend line here connected from that March highs with intraday 5 waves up, let's say back towards 64.40 or 50 around there, then I think that we would have a tradable low. So until that happens, I'm very careful here, and just be aware that even lower, deeper supports around 78.6 could be retested. Okay, so overall, I think that all this very big drop from February highs could be coming into these very late stages. Now let's take a look also on gold. Now gold, firstly, big picture, I still think that this uptrend is valid and is going to remain in play here for the next few months. However, this correction that we are tracking from all-time highs is still unfolding. Can be a flat, can be a triangle if maybe these lows here, swing lows at 1680, will stay in place. So for now, what we are looking is just tracking a correction, very big higher degree correction within higher degree uptrend. So I'm looking this to be a wave 4, and at some point I think that these metals again could find a support, but maybe the first thing what we have to see is that US dollar hits resistance. So for now that's still not the case. And also what I have been looking for is COT data. Well, COT data is here. You can see that large players here are obviously heavily short, but definitely not that short compared to these previous readings here, which was back in what, 2018, and then even 2016. Okay, and this was, I believe, 2014. So it looks like there's still room for these players to be even more short before we move into some extreme levels and potentially turn around here. So with that in mind, I'm aware that there can be a retest of 1670, 1680 level. So if you look at the 4-hour chart here, still tracking these 5 waves down, as I said, of a potential wave C within a higher degree flat correction. So more weakness could be seen. Even this recent breakdown point around through 1800 suggests that new intraday bearish impulse is in play and that we could potentially see further weakness. So we'll see how the market will actually respond at these lower levels. Definitely a very strong support is this one around 1680. Okay, so we'll see if maybe we can retest, maybe clear some stops down there, and then we turn higher. Keep in mind that if this level is broken just temporary, there will be a lot of traders probably stopped out. There will be new traders trying to play a breakdown, and then there will be a lot of or extreme bearish sentiment, which will move into even more extremes. It means that it could be actually the opposite reaction. Now let's take a look also on crude oil. Now crude oil, higher degree, well, still I think it's now consolidating. One of the most important price action was probably last week when we have some heavy selling, but then towards the end of the week the price stabilized and again moved back above 100. So I think that this choppy price action will stay in play here for some time, but eventually we will see even a new break to the upside in Elliott wave terms. Keep in mind that this is still an uptrend because you have higher highs, higher swing lows, and now you are just consolidating rather than seeing a very strong bearish pressure. So as long we are trading in this range, I'm aware that we could be even having a triangle here with more upside to come after we will have an ABCDE patterns, because these are the subdivisions that you want to see in a wave 4. So here is also the better closer look. So that's the wave A, you have a wave B, and you have this 3 waves down for a wave C. Okay, so that was the support that I also highlighted in our past updates last week, and more importantly, we have seen a very nice response here with the bulls. And if you look closely here, to give you even better perspective, a closer look, well, notice that this bounce is in 5 waves. Okay, that's a wave 1, wave 2, wave 3, wave 4, and wave 5. And always when I see this structure from the potential, from a very strong support that I was able to identify here, well, this means that we have some very constructive price action that could take us even higher here. So in my view, I think that we could see a rally back into this 108, maybe even 1012 area after the first minor retracement and then more upside. So as long as this support holds, I think that there is a chance for crude oil to climb higher. Now, also with that in mind, if crude oil will continue to rise on even short-term or longer-term outlook, maybe even more important, I think that at some point the dollar NOK will again be attractive for the bears. I still think that this is a very nice looking price action, especially in Elliott wave terms. You have the full cycle that I'm tracking here from down from 2020 highs. That was wave 1, wave 2, nice wave 3, 4, 5, which means it was the first impulse away from the highs. And these impulses, as you can see, do not have overlap. While this current rise, well, you had some very nice overlap in the first part of this contra trend movement. So I'm thinking about complex correction that is now moving into this 61.8% retracement area. So if crude oil will continue to stay in consolidation or maybe even break higher at some point, I think that this dollar NOK could potentially see a reversal to the downside. But again, of course, I want to see 5-wave drop to make sure that low is in place. So far, this looks promising. We also have some RSI divergence, but again, we need to see a confirmation from the price action itself about the potential turn. For now, obviously, this is still an uptrend. Now, let's take a look also on stocks. As you know, there was no word about recession from the Fed last week, so they remain hawkish. US jobs numbers were good. So normally this means more hikes. Potentially it should mean more weakness on stocks, but this is not playing out. So I think that we have to consider that if under these conditions stocks are not coming down, well, we should be aware of the opposite. In fact, we have seen some nice response to the upside on stocks towards the end of the week. So I think that maybe it's happening that markets are already pricing in this pessimistic outlook, and in fact, move down on stocks was quite deep. So I would not be surprised if it's a time for a bounce. In fact, I want to look here on this German DAX first. Well, let me take a look on the 4-hour first. Well, you can count these 5 waves down on this short-term cycle from June highs. So these 5 waves down suggest that market, even if it's still in a downtrend, should see a free wave reaction to the upside to make a pullback. Because even if this rally away from the recent lows will be corrective, just temporary, it should be made still by free waves, because that's a minimum structure of a counter-trend movement, an ABC legs. So what I see here, well, still that's only wave A in my opinion. So you will expect wave B and then wave C, and normally you will see a retracement of a correction back into the previous wave 4 termination zone. So that's a very strong resistance here around 13,500. So even if this is a just temporary rally, I think that there is a chance for more upside, potentially even lower, even higher, because any free wave structure can always become even 5-wave structure. But somehow I always try to look at the markets from a minimum perspective rather than making some very strong predictions here. So for now, I think that this is quite an interesting bounce. We have also a nice reversal weekly candlestick formation here, so I think that more upside could be seen. What I love about this price action is also that recovery is coming out of this ending diagonal, and normally ending diagonals are slow, overlapping, but once they are finished, the markets will actually explode, but in the opposite direction, and momentum will pick up, and this is something that we could see in next week. Also, what I like here about the just poor price action, well, we have seen here break below these levels and then rally. So it looks like that was a failure. So in combination with Elliott waves, well, I think that this is quite interesting for more upside early next week. And now also let's take a look also on the S&P 500 higher degree time frame charts. Well, we are making a very nice pullback, but notice that in distance it's a very similar to one that we have seen back in 2020. Also, you are at the 38.2%, and plus we haven't seen any overlap with the previous wave 1 or wave 2 territory. So higher degree trend could still be in play if we consider potential bullish impulse. However, again, of course, we want to see for a higher degree trends to change its cycle, we want to see some confirmation. And unfortunately, this one is still far away. Only a break above 4,200 could be a very big game changer here on the S&P 500. Okay, traders, thank you very much for attention. I hope that you enjoyed this video, and talk to you soon next week with our new updates. Bye.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.